Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Happy New Year. This is our first report of the year 2025. And as we always do, we shall start off by looking at the largest changes in commercials net positions. But before we jump to the review, just a brief reminder for those who are new to COT analysis. Here at COTBase.com, you'll find a lot of educational material. For example, the release schedule, which I think is quite important. You might be wondering, why is it that we're putting out this COT review on a Monday? Well, the reason is the report was delayed. Usually it's on a Friday, but sometimes when there's a federal holiday, these reports may be delayed a couple days. If you'd like to know when these reports are coming out, then the release schedule is for you. If you need more help, then we are actually starting a new function. Starting 2025, consultations is available. If you'd like to speak to me directly, one-on-one, we have 30-minute and 1-hour consultations available. You can check that out and feel free to schedule a meeting with me. And that's about it. Or actually, one last thing, New Year's deals. We have these New Year deals going on in January, so if you'd like to take advantage of our best performing services, classic COT analysis, everything you see on the website, the COTBase premium membership, or our very popular iCOT Intraday Indicator with AfterSignal is on sale. You can actually purchase both at very discounted prices. If you have any questions, don't forget, we are here to help. Either comment underneath the video or send us an email to info@cotbase.com. Let's get started. This is our first review for this year. We are analyzing, of course, the classic COT report type, futures and options data combined. And our first market is going to be crude oil, the Brent crude oil to be specific, where, as you can see in commercials, net positions, so net positions, we've got commercials, large speculators, and small speculators, the main trader categories. Commercials, knowing most about the underlying commodity. Here they have a 35% change in commercials net positions. You can see that on the chart over here, larger than average. You can see here we had a greater than average bearish change signal, and we happen to like change signals when they are occurring in the opposite direction. So here this was a successful bearish change signal, whereas this was not, but this bearish signal came when the market was already coming down, so we could have neglected that. Now we have the market rising a little bit, and this recent change signal suggests that we may see a bit of a pullback in prices in the next couple of days. Moving to a 5 years chart, you can see that there is not really a COT Extreme to talk about. If you take the horizontal line, we just put it here at the very end of our chart. That shows us where the net positions are lying, and you can compare that to the past 5 years, and it tells us that there's not really a significant extreme, a stress in traders' net positions. We are, of course, first starting with commercials, but you can see that's the same for large speculators. Maybe small speculators are a little bit, I'd say, pessimistic, and that's usually a good bullish sign, actually. Moving on to our next market, platinum. 24% change over here in platinum. Let's open a 1 year chart. There you go. You can see that the change size is larger than average. We have seen platinum rise last week, so I think the market has already reacted. Don't forget that when we see the report is a couple days later than what the report is gathering data of. So Tuesday is here, and then we get this normally on a Fridays, but as I just said, it may be delayed a couple days. Moving to a 5 years chart, you can see that I would say the market, or at least traders, are leaning towards the bullish side of stress level analysis, meaning that I think it's supporting the possibility of platinum rising, but the extreme signal is not that shockingly obvious, so it can easily continue this rise in commercials. Well, I say rise, but actually it's a decline of their net short. And of course, if they would reach zero line and become net long, which as you can see on this 5 years chart did not happen too often, but when it did, that actually coincided with some amazing buying opportunity. So we'll see what happens in platinum in the next couple of weeks. Moving on to soybean, 17% change over there in commercials net positions. Let's jump back to the 1 year chart. It's a bit larger than average, but nothing surprisingly large. I mean, you can see over here, this was a beautiful bearish COT change signal. You can see that it was greater than average, and we got that. The Friday was over here, just around the top. That was a very successful bearish change signal. Or we can see a little bit larger than average bullish change signal that happened just around the bottom over there. Moving to a 5 years chart, you can see that we are moving away from bullish COT extreme levels. You can see that the most bullish extreme levels happen around over here, 200,000 contracts net long, not surprisingly coinciding with this bottom over here. And you can see the market did not go lower. So who knows, we may see soybeans rise further from here. Moving on to large speculators COT extreme analysis, we still have the New Zealand dollar on top of our list with an all-time COT extreme, all-time meaning never in the history of COT reports for the New Zealand dollar. We are, of course, talking about futures and options data combined. Have we seen commercials reaching 50,000 contracts net long level? Large speculators almost 50,000 contracts net short. So that's a significant extreme, suggesting that we should be expecting the New Zealand dollar bottoming very, very soon. I would argue that it's happening when we are actually reaching a very nice support level here. Moving on to orange juice, we have 419 report extreme in large speculators net positions. This, of course, still is the all-time chart. Of course, when I say all-time, COT data all-time. And it is, of course, a bearish COT extreme. It can grow even greater. You can see that we have had in the past larger extremes, but still quite large, suggesting that the orange juice may actually find a top very, very soon. Rough rice is our last market for this review. 301 report extreme in large speculators net positions. This is, of course, a bullish COT extreme scenario, suggesting that we could see rough rice rise from here. Of course, there's so much to do here at COTBase.com. I understand you might be interested in other markets. You want to dig deeper in your analysis of the report. Well, that's something you can do here. We pretty much built this service around the commitments of Traders Report, trying to offer you tools that help you identify great trading and investing opportunities. But besides giving you all those tools for the classic COT report, we've actually accomplished something quite unique with our own indicators, bringing you the COT analysis concept down into the shorter time frames. This is the iCOT Intraday Indicator. This is the very first version of it. And you can see that the indicator works off of these lines that are very, very similar to COT charts, but they are called iCOT scores lines. It is not data from CFTC. It is our own unique indicator, but we found that it is very, very helpful for shorter term trades. This is actually a gold chart, a 1 minute candlestick gold chart, and you can see how accurately it is able to identify shifts in the trend. This chart over here is good because it can actually explain the different type of signals. And of course, if you are interested in this indicator, you may give it a try. And with these New Year deals, you can actually take advantage of these indicators at very, very good price range. If you have any questions, always feel free to contact us either through the comments section of our YouTube video or simply by email to info@cotbase.com. Thank you so much for your attention. I hope you enjoyed this review. If you enjoyed it, actually, I would appreciate a like, or if you have not yet subscribed to our YouTube channel, that might be something you would be interested in doing, so that you are notified when we come out with a new analysis or a new educational video. Thank you so much. Enjoy your week.